So I'm sitting here with Randy with Home State Bank. Randy, I got a couple questions for you. How do you feel about interest rates right now? They just came down, correct?
That's right. We've seen about a 1% decrease in interest rates from about 9 months ago, where they were 7s, maybe a tick above 7, to where we're seeing 6s, very low 6s right now.
Yeah. So it just came up just a hair, a couple days ago?
Yeah, I think yesterday we saw a little tick back up. So, they move around daily.
So what do you feel like? People are constantly talking about interest rates, right? That's like the big discussion.
Well, that's what everybody wants to know, right? They come into my office and they're looking to apply for a mortgage. Everybody wants to know what's the rate, right?
Yeah.
And there isn't a one size fits all. It depends on your financial picture, what product works best for you in your budget. So I can't just say this is your rate, right? We need to pull some information.
Do you feel like interest rates are actually like a huge deal versus something else? Or because everybody's like, yo, I want the lowest rate possible, right? I mean, you go into a store, you want the best deal for something possible. I mean, it's just natural, right?
Of course, and Alejandro, that's a great question. And interest rate is important. I mean, it's gonna determine what the cost of your mortgage is going to be on a per month basis, right? However, I would not let that deter me from getting into the market. So a quick, just using some budgetary numbers, right? On a $300,000 mortgage, if your rate moves a half a percentage point, it's gonna cost or save you $100 a month, right? So we're at the end of the year, let's say you're waiting for the rates to move a half a point down. You're going to save $1,200 a year on that $300,000.
For instance, you're at 6.5 right now, right? And you're waiting for the interest rates to drop to 1.6.
Right.
Something like that.
Sure. Yep, exactly. So that $300,000 mortgage costs you another $1,200 a year if rates don't move, right? If you don't see that 6. However, by sitting on the sidelines, you lose all of the benefits of home ownership. You're not building equity in your home. You're not seeing the appreciation that homes have historically seen, through the life of home ownership. So, again, using budgetary numbers, we would expect to see a $9,000 depreciation on that home price.
That's what the people are missing out on.
Exactly.
Because they're waiting for interest rates.
Exactly.
Right? They could have got in at 7, 7.5, 6, 6.5, or whatever it is. They're just constantly waiting for that deal. But if they own a house, and over the last 3-4 years, on average, if you're at 5.6%, let's just say, of appreciation, they're missing out on that equity.
Tens of thousands of dollars over that period of time. Yeah, exactly.
Yes. So what if we look at the other side of things? What if you already own a home? And you're at like a 7.2 interest rate, right? Something like that. You have a $500,000 house. Mm-hmm. You're paying like $3,400 a month. So interest rates just came down. Right now they could be paying $400 less. Would that be worth the conversation for somebody?
Oh, certainly. Yeah. If you closed on your home in the last year or two and you're high 6s, low 7s, that's worth a conversation. We very likely could save you $200-$300 on your mortgage payment by refinancing.
Good. What are we at right now? Like average 6.39% interest rate.
Yeah, we closed one last week at 5.875. Now that was last week.
Yeah.
780 credit score, all the things, right?
Okay.
Today we're probably closer to 6, maybe 6.8.
Okay, that's really good.
It's still great. Yeah,
exactly.
Exactly.
Wow. Okay, so it is worth the conversation. Now, what happens if they do refinance? Do they start the clock over with that 30 years, or what does that look like?
Right, so we can. That's an option. We can pull equity out of the house, but if someone only wants to take advantage of the lower interest rates and not reset their mortgage, we can do a rate and term refinance. So it's kind of a misconception that if you refinance, you're going to reset the length of your mortgage, and often we do, but it's not necessary. It's really up to the client. So exactly. So I mean, you can use that equity or stretch that loan out and make some home improvements, or pay off some higher interest debt, or like we just mentioned, simply recapture that lower interest rate.
Yeah, that's perfect. So Randy, what is the best way for people to get hold of you? Preferably email, phone, a link?
All of that works. However, the best thing to do is to have a phone conversation. For me to have a phone conversation with someone.
Okay.
So my cell phone number is 920-213-4988, and people can reach out anytime. You can have that conversation, really get an understanding of what you're looking to do, and then I will send you an application link, and we'll move forward with what makes the most sense.
Okay. And when somebody applies, do you get alerted that they applied, if they finished, didn't finish? I mean, what's your process?
Yeah.
Do you just reach out to them right away and say, hey, I noticed you started the application, or you completed it?
Of course, I'll get an email notification someone has started an application. I'll review it. If we haven't had that conversation, I'll reach out, again, understand what you're looking to do, and if I need anything else, at that time I'll ask for that.
So you can help build out a plan.
Exactly.
Perfect. Well, Randy, I appreciate this conversation.
Always, Alejandro. Appreciate you.
All right, Randy Panberg with Home State Bank.
Take care, everyone.